So you want to know the real difference between a good SAP consultant and a truly great one? I'll give you a hint. It has nothing to do with memorizing more T codes. You know, those little system shortcuts. Now, it's about a total shift in how you think. And that's exactly what we're going to break down today. That journey from being a technician to becoming a true architect in the world of SAP SD.
There's this saying, right? A junior knows the T code, a senior knows where the money goes. And it's so true. We're not talking about just getting faster on the keyboard. We're talking about seeing the whole financial story unfold with every click. It's kind of like the difference between knowing how to drive a car and actually understanding what's happening under the hood.
So here's our plan. We're going to follow a consultant as they level up, tackling 5 key challenges. Think of each one as a new layer of the onion, peeling it back to get to the core. This is how you go from just having technical skills to developing that strategic mindset, the kind that businesses rely on to make the big decisions.
All right, let's dive right in. Look, processing a standard sale, that's entry-level stuff, right? Customer buys something, you ship it out, easy. But what happens when your product is sitting in their warehouse, but it's still your property, maybe for months? That is where the real fun begins. And this concept right here, this is the first big unlock. You have to get this. In the real world, who has the product and who owns the product are often two totally different things. A customer can be holding your stuff, but you're still on the hook for it. Getting your head around that idea, well, that's the first real step from junior to senior. It's the bedrock for everything else we're going to talk about. So, how do you figure it all out? Well, every senior consultant has a kind of mental toolkit. And these 3 questions are the most important tools in it. Think of it like your own personal detective kit. Answering these 3 things, who holds the risk, who physically delivers it, and when the accountant gets to be happy, that's how you cut through all the noise. The answers tell you exactly how to design the solution in SAP. Okay, so we've got our 3 golden questions. Let's put them to the test. Our first challenge is what I like to call the ghost inventory puzzle. And trust me, this one is a classic for a reason. It catches a lot of people off guard when they're starting out. Consignment stock is the perfect way to see this possession versus ownership thing in action. Here's an easy way to think about it. Imagine you own a vending machine. You go and fill it up with snacks and drinks. All that stuff is yours, but it's sitting in someone else's building. You only make money when somebody actually buys a candy bar. That's consignment. And while it's awesome for the customer, it can be a huge headache to keep track of your inventory that's just out there. So the first phase, the fill-up, is just about logistics. You're just moving your stuff from your warehouse to their location. That's it. It is not a sale, and that means no invoice, no revenue. If you send them a bill at this point, oh boy, you've just booked revenue you didn't earn, and the accountants are not going to be happy about that. The actual sale, the moment the money matters, only happens when the customer actually uses your product. And this could be days, weeks, even months after you shipped it. They call you up, say, hey, we used 10 of those widgets, and bam, that's the trigger. That's when ownership transfers. That's when you finally get to bill them. But hey, consignment is just one way to do it. As you can see here, you've got other tools in the toolbox. You have third-party sales, where your supplier ships straight to your customer, or IPO, where it gets a bit more complex. The key takeaway is that each of these has a totally different physical flow, a different trigger for when you get to send an invoice, and its own unique set of risks. The senior consultant, they know all of them and can pick the right tool for the job. All right, level 2. Now we're going to flip the script. We're not looking at external customers anymore. We're looking inside the company itself. And this is where it can get super confusing, because sometimes it's hard to tell if you're just moving inventory from one shelf to another, or if you're actually making a legal sale to yourself. And really, the big question you have to ask is this. Are you just shuffling things around within the same legal company? Think of it like moving a box from your garage to your attic. That's an intra-company transfer. Or are you selling that box to your sister company, which is a totally separate legal entity? That's an inter-company transfer. And that, my friends, is a whole different world financially. So for an intra-company move, it's simple. It's your stuff, you're just moving it. No sale, no money changes hands, no revenue. But here's the trap. If you mess up the configuration in SAP, you could accidentally trigger tax calculations. Can you imagine? You'd be paying taxes to the government for moving your own property between your own buildings? What a waste of money. But when it's intercompany between 2 different legal entities, it's a real sale. One company code has revenue, the other has an expense they have to balance out. If you forget to create that internal invoice, you've basically created a financial black hole. It might go unnoticed for months, but come the end of the year, someone's going to find a huge gap in the books, and it's going to be a 5-alarm fire to fix it.
Okay, ready for the next level? Now we're going to bring in a new enemy: time. We're moving beyond simple in-the-moment transactions. Now we're dealing with promises that you make to a customer that might not pay off, or rather cost you, for an entire year. And these are like hidden debts slowly building up in the background, ready to pounce on your profit margins. Rebates are a perfect example. You know how these work, right? It's like your favorite coffee shop's loyalty card. Buy 9, get the 10th free. It's a fantastic sales tool. But from the company's point of view, it's a growing liability. With every single sale you make to that customer, the amount of money you owe them later just keeps ticking up and up and up. And this slide, this is what keeps CFOs up at night. Imagine this. Your company is celebrating a record-breaking year. Everyone's getting ready for big bonuses. Then December rolls around and bam, you suddenly have to pay out $1 million in rebates that nobody planned for. All that profit you thought you had? Poof, gone. It's an absolute disaster that happens more often you'd think. So how does a senior consultant prevent this catastrophe? The magic word is accrual. It's step 3 here. A properly designed system will automatically, with every single qualifying sale, take a tiny slice of the profit and put it into a separate bucket. It's like a digital piggy bank for that rebate. Then, at the end of the year, when it's time to pay the customer, the money's already set aside. No surprise, no panic, just business as usual. And that brings us to the final level, the boss level, if you will. This is where you make the leap from technician to architect. You're not just fixing problems anymore. You're taking all this deep knowledge we've talked about, and you're designing the whole solution from the ground up. You're moving from being a mechanic to being an engineer. See, a true architect gets that timing is everything. They live by the 110-100 rule. A change you make during the design phase, the blueprint, that might cost $1. But if you wait and make that same exact change after the system is built, it could cost $10. And if you make it after you've gone live, forget about it. That could be $100 or more. That's why getting that blueprint right is absolutely everything. And look at this. We're right back where we started. Our 3 golden questions. But now, they've leveled up too. An architect isn't asking these about one little sales order. They're asking them about the entire business process. They're thinking about risk across the whole supply chain, logistics between different systems, and the total financial impact of the solution they're building. It's the same questions, just on a much, much bigger scale. Because ultimately, that's what this journey is all about. It's not about memorizing more stuff. It's about maturing your professional perspective. It's seeing the forest, not just the trees. Understanding why things work the way they do, not just how. And then using that wisdom to build something that truly makes a difference. This is what professional maturity looks like in our world. So the only question left is, are you ready to level up?